What's up traders, welcome to another video. Today we will be speaking about trading psychology, the most important part of trading. Without it, you can have the best strategy in the world, but you will not be able to trade it profitably. So, if you're new to the channel, I would like to introduce myself. I'm a top author on the TRADINGVIEW platform and I'm a swing trader. In this video that you are about to watch, you will learn everything that you need to know about trading psychology, because many people just hear trading psychology, but they have no idea what trading psychology actually means and what you're supposed to do to be actually a person that has understood the way they need to think and the way in which their head needs to work if they want to be a real trader. Without further ado, let's get in the video. Okay, so I don't want to approach trading psychology like most videos actually did on YouTube, because I checked them out and most of them basically don't give you anything actually useful. Because trading psychology, it's not something that you just master without first mastering your strategy, okay? It's not something that you can master if you are a completely discretionary trader and you don't know how your strategy actually works. Because this is the point. The first thing that you need to master to basically have a solid trading psychology, and I will now also show you exactly why, is that you need to know your strategy and statistics. What do I mean by this? I mean that if you know the statistics of your strategy, so basically if you have both back tested your strategy for at least, let's say, 3 years, and you have also live tested your strategy, then you will know exactly what is the win ratio. Well, you will know what's your win ratio. You will know what your probabilities are in terms of risk to rewards. You will know how many times a trade ends up being break even, and basically you will have informations on your strategy that will guarantee you that long term your strategy is actually profitable. And that is the only thing that will ever give you the basically peace of mind and consistency to just apply your strategy in a consistent way. What do I mean by this? That you just keep trading the same rules over and over and over again, even if, for example, you lose 5-6 trades in a row. Most people will start basically jumping from strategy to strategy every time they lose a trade. They lose 4 trades in a row. Okay, the strategy is not working, let's try another strategy. Then, okay, this strategy is also not working, let's go to another strategy. Okay, now this strategy is not working either, let's go to another strategy. And they just keep jumping from strategy to strategy until then sometimes they even end up in the same strategy they had at the beginning. And the problem with this is that they never really tested one strategy, tested and proved that the strategy is actually profitable, and only change while you're back testing the strategy. And then you will never not apply it consistently and not follow the rules if you know the statistics of your strategy. Because if you know the statistics of your strategy, then you know that you need to apply the same rule that you have tested, and inevitably you will end up in profit. And that is what you're supposed to be doing. You will never make mistakes. One of the biggest mistakes that I see most traders do, for example, is basically moving their stop loss. So for example, let's make an example here. You clearly see you have previous support, turn resistance around this area. The market created a very nice impulse from this high to this low. You can even have extra confluence by taking your Fibonacci from the high to the low. You clearly see that the market has rejected a 78.6 and closed below the 61.8. Now keep in mind we're only basing our analysis on the daily time frame, just to make an example, because obviously we were supposed to check also higher time frames. However, just for this example, if for example you know that now on the 4-hour time frame you're looking for entry. You see that the market has the possibility to create this head and shoulders. You take your Fibonacci from the high to the low, and you realize that the 50% is in perfect confluence with the left shoulder. So you take the short with a stop loss above this high, and now you're all set to take basically your trade. And now you're all set to take your trade. Now what will be your reasoning at this point? You will just place your sell limit, stop loss there, take profit, for example, here below at the 0.6100 area, so basically psychological number, and the market starts going against you, okay? You see the next candle just impulses to the upside. And if you know the rules of your strategy, you will know, for example, okay, I know that this kind of setup taken with these confluence factors have determined basically a win ratio, okay? When I take a setup with these rules, then I, for example, win 50% of the trade, okay? So you will see the market going against you, your stop loss is near to getting hit, and you won't care because you know that this will be part of the 5 losing trades out of 10 trades with this strategy. And if you take 10 trades, okay, you take 10 trades applying a strategy with a 50% win rate, but you have at least a 1 to 3 risk to reward. Now in this particular case we have 1 to 5, but let's say you have a 1 to 3 just to keep things extremely basic. So you take 10 trades and you lose 7 of these trades, okay, out of 10, so 30%, so basically 70% losing ratio, okay, and you will basically end up with a -7R. Now in this particular case, let's for example make that R is 1%, so you're risking 1% per position, so -7% basically will be the result of you losing 7 of these trades. And if you win 3 of these trades, then basically what you made is 9%, okay? You made 9% plus 9%. So you can see that you only won 3 trades out of 10 and you are still in profit, okay? Just to make you understand. So you will know that this is part, for example, for a strategy that has a 50% win rate, is part of those 5 trades that actually hit your stop loss. So you won't make any kind of emotional decision and just let the trade take you out for a loss. Now, in this particular case, many traders, what they will do if they basically are new to the market and don't have confidence in their strategies, they will start second guessing themselves or on the profitability of their strategy. And the biggest mistake I see people make is moving your stop loss. Never, ever, ever move a stop loss. Never. Do not move your stop losses, okay? If you start increasing your stop loss, you are basically increasing, okay? You're basically completely ruining and increasing your risk management, okay? And people just start saying at a certain point the loss becomes so big that they can't close it because it makes basically no sense because they are so close to a margin call, and at some point the margin call will come, okay, and you will blow completely your account. Accept the fact by knowing the probabilities of your strategy, and that is the most important part. You need to know the probabilities of your strategy. So what is your win rate? How many trades your strategy makes you win over 10 trades, or even better, over 100 trades? So do you have at least a 30% win rate with a 1 to 3 risk to reward? Yes, then your strategy is profitable. You only need a 30% win rate with a 1 to 3 risk to reward for any strategy, any swing trading strategy, or strategy in general, to be actually profitable, okay? If you have developed a strategy with these particular rules, then you will inevitably be in profit if you apply the exact rules that you have actually backtested, okay? Once you have backtested those rules, you need to apply them. It's extremely important. Once you have basically developed this strategy and you know the statistics of the strategy, at that point you need to apply it. But you apply it because you know that it works. Okay, the problem is that if you don't know that it works and you don't backtest it and live test it, then you will never basically stick to one strategy and start changing. And this is the circle of doom. You will never get out of this if you don't understand that backtesting is extremely important in developing confidence and improving your strategy. And live testing is just to show that you can actually apply it consistently. But if you know that it works, you will be able to apply it consistently. Now, there are two ways to go for this. There is the hard way. Basically, you develop your own strategy from scratch, and I promise you that that will be very, very hard, but I did it, so you can do it also. The easy way is just to join the mentorship program and learn my strategies. Okay, I'll give you all my strategies, plus I also teach you each and every day how to apply them in the market, so live market conditions, showing you the entries, exits, all the reasons for entry each and every day directly on your student's dashboard. Plus you get my Q&A, so every question you have each and every day gets answered in video format for you directly on your student's dashboard. And to join, you can just click the link below this video, and I'm looking forward to have you on board the mentorship program. If you enjoyed the video, make sure you smash the like button. It really does support the creation of more free content just like this, as well as letting me know in the comments below what you think about trading psychology and if you consider yourself a person that has mastered it. Without further ado, I will tell you to go and check out the website and the free training that you will basically have as a pop-up as soon as you click on the website, and go check out the mentorship program, because that is where you will actually learn all the rules of our strategies, as well as having my complete mentoring and me answering any questions that you have each and every day, as well as having my complete market breakdown with entries, stop losses, and take profits each and every day. Let's get to the next video.